Bombshell dropped on gold, silver gets momentum. Hedge funds are easing back as gold levels off, and this is good news for silver. Let's put some silver in here actually. Sorry for the shake. There you go. Now, it's good news for silver because silver is more tied to the global economy, and according to Morgan Stanley tells us that to varying degrees, this is an article on morganstanley.com. It says, to varying degrees, both gold and silver may provide a hedge in a potential economic or market downturn, as well as during sustained periods of rising inflation. We've seen that, yes, but Morgan Stanley, I hope you've been awake, Morgan Stanley, with your eyes open the past 2 years, because silver has just been flat between $22 and $24 for about a solid 2 years. Let's keep going. Morgan Stanley says, understanding the difference between how the two metals are used, their economic sensitivities and technical characteristics can help you determine which metal may benefit your portfolio. Morgan Stanley says silver may be more tied to the global economy than gold. That's really interesting, especially as central banks are buying up just by the shipload, just buying up gold over the past year. So, yes, silver certainly is tied to the global economy, but central banks are buying up gold and buying up gold. Okay, Morgan Stanley says half of all silver is used in heavy industry and high technology, including smartphones, tablets, automobile electric systems, solar panel cells, and many other products and applications, according to the World Silver Survey. As a result, silver is more sensitive to economic changes than gold, which has limited use beyond jewelry and investment purposes. When economies take off, demand tends to grow for silver. And yes, we are absolutely seeing that, and we're living through it. As the green revolution really takes hold and this push for electric vehicles, the push for solar panels, we are seeing a shortage of silver. When we look at the numbers, we see that the numbers put out by the Silver Institute are not aligned with what industry tells us we're going to need. So that right there, right, even according to Morgan Stanley, is a very conservative outlook on metals. We're talking about Morgan Stanley looking at this. And so if a conservative corporation like this is showing the importance of silver in terms of being tied to the global economy, and we already see that there's a shortage of that silver, right? It's great motivation for me to continue stacking. And as this plays out, I've been stacking silver for just years and years. And there have been times, specifically the past 2 years, where I've looked in the mirror and looked at the silver I've accumulated and wondered why am I continuing, because it's been so stagnant. But I really see coming down as 2024 closes out, 2025 comes in, I see silver just being in serious demand. With all of these products that it's got to be in. Okay, let's continue. Morgan Stanley says silver is more volatile than gold. The volatility in silver prices can be 2 to 3 times greater than that of gold on a given day. While traders may benefit, such volatility can be challenging when managing portfolio risk. And I think this is really, when they talk about that type of volatility, clearly it's not spot price, right? They're talking about paper. They're talking about people that trade silver on paper, but when we look at the spot price that we deal with as silver stackers and gold stackers, when we look at that price remaining stagnant for about 24 months, we can't say that that's volatile. And during those 24 months, we saw gold really come up and come down, especially with this recent bump in gold. And you heard me, I was confident that gold wasn't going to correct last week. I was confident that it was going to come back down to 2,000, maybe a little under 2,000. I really saw a correction coming. So I'm surprised. Hey, I'm happy to be wrong. I'm happy to be wrong. I hope that I'm so wrong that gold continues and shoots to 2,300. I would be very, very pleased to be wrong. Really. So let's continue. Morgan Stanley says gold has been a more powerful diversifier than silver. silver can be considered a good portfolio diversifier with moderately weak positive correlation to stocks, bonds, and commodities. However, gold is considered a more powerful diversifier. It has been consistently uncorrelated to stocks and has had very low correlations with other major asset classes, and with good reason. Unlike silver and industrial-based metals, gold is less affected by economic declines because its industrial uses are fairly limited. So no matter what happens in the economy, it's not like silver where a product will be requiring gold. That's really the huge difference. A product is not going to really be requiring gold, so gold separates itself. Silver is currently cheaper than gold, and that will clearly continue. Now, there's good news for silver. Here's the frightening news coming out for silver. This is an article by Joaquin Monfort, and it says, "The silver price analysis, threat of a short-term trend reversal." I really don't want to hear that word reversal when I'm thinking about silver these days. You just heard me complain about silver being stagnant for 2 years. When I think of this metal here, trying to get a good shot there for you. When I think of that reversing in any way, that makes me nervous. So look, this article says a silver price is threatening to reverse its short-term uptrend and move lower within a target it has been yo-yoing with for almost a year since April 2023. Just reading that sentence makes me feel like these analysts are seeing silver dropping down to $24, $23, and remaining stagnant again. The article says that analysts look at the short-term trend and they show warning signs of potential trend reversal after the pair rolled over last week. It says silver price reversed direction at the long-term range highs and began descending rapidly. The first sign the trend might be changing was the decisive break below the last swing low of the previous uptrend. And silver has completed one peak and trough lower since last week. We hear that phrase, peak and trough. That's when it kind of looks like a cup. The article says if it completes another and manages to make a lower low, it would be a fairly reliable signal of a reversal of the uptrend. Such a reversal would probably usher in more weakness for the precious metal. Those are those are some frightening words when we've been living with stagnant price for silver for so long. I really hope that that the charts that we're analyzing are not the full story, and that silver really, just as it did when gold broke that $1,000 mark back after the financial crisis, it followed gold. We're all waiting patiently and with bated breath to see silver really do what it's supposed to do, and historically repeat that pattern. We're waiting for silver to follow suit, and I truly, in my experience in precious metals, is that history does repeat itself, and I absolutely see silver doing exactly what it's supposed to do.